One moment. Had to fix something. Hope everyone's doing well. This video is just going to cover some more always in. And yeah, that's just really what I want to cover. So always in, talks about it a lot in the videos. And, again, one thing I want to make crystal clear, these videos are intended to be a supplement of Al's video course, not a substitute. They're supposed to assist. My goal is to maybe reiterate what I was explaining and it helps somebody. But really why I started doing this is, number one, it kind of challenges myself. I feel challenged to explain the information. Do I really understand this? Because it's more challenging when you have to explain it. It's just that simple. So my benefit is I have to further think upon whatever topic and explain it. And the benefit of the viewer is this hopefully will help with your understanding of Al. But at the end of the day, you're going to get more out of watching Al's videos, watching Al's webinar than these videos. That's just the truth. But I hope that these videos help you, and I think they will. So with that said, most people know I've studied Al for 2013, probably roughly, so I don't know, 6-7 years. And the biggest thing I've learned is Al knows a little bit of everything. He's really good at scalping, but that's because he understands how to actually swing trade. He understands minor and major reversals. He understands always in. And he uses that information to scalp. So let's get into it. I'm really, as I just discussed a few minutes ago, these videos are going to compose of just a lot of always in discussion. And always in, buy above stop entries, wait for breakouts, and repeat the process. So here we have a gap up. And we have consecutive bull bars, 3 bull bars, 4 bull bars. Always in, traders will buy, stop below here. Many bull bars, it's probably a minor reversal. Some traders might get out, but most traders would not. 3 consecutive bear bars, 50% pullback, tested the bar 1 low. Then a big bull bar surprise, follow through bar. Is this, I guess I could do this for now. Is this a second leg trap? Probably not. This is just too big that the odds are we're going to go up higher. But it is a sign that, hey, maybe the bulls aren't as strong as we think. But it's probably more profit taking. So now, stop below here. Do bulls get out here? They can. 1, 2, 3. And this is kind of a special situation. If I was I would get out of short. I'd get out of longs below this bar for 2 reasons. Number one, this is a credible sell. You sell, you don't get out here, you sell more above this bar. No surprise, this low of this stop entry is at the high of this bar. So you sell more here, sell more below the bar, put a stop somewhere up here, betting that price is going to get back to there. That happens very often. And look what happened back at this low. Why did we bounce? We bounced because of profit taking. Bears know we're going to get to here. Bulls also know that, so they're going to buy at this low. So again, bears get out. Bulls. Bears will sell, probably for a scalp. Bulls get out. Is it always in short? It might be, but it could be a double bottom, so not really great. Probably going to have a retest. And, again, I wouldn't sell that. Bulls, maybe they buy, stop up here. Maybe they buy, stop below here. 3 consecutive bull bars, stop down here. Could be a small measuring gap. Maybe from here to here. And that looks like what it was. 2 things about this measuring gap. So, number one, the reason I drew this, it's a breakout, follow through bar. It's big, it's not too late in the move, so we may get a measure move up. And from this trading range, if you take this low and this measuring gap, it takes you right to the same price level, the 25.50 area. So that and it's also a round number. All those things make it a little higher probability that we're going to test it. So would I get out shorts below? You can. Stop down here. If you do, you got to look to buy lower. And traders will probably start buying here, stop down here. But very tight channel. And there you go. So kind of a big trading range. Looks like we're going to just sideways into the day. So really, we never really went always in short on the day. You know, if you think about minor and major reversals, major reversal implies a major change in a trend. So an opposite trend. So a bear trend to a bull trend to a bear trend, a trading range to a breakout. Minor implies, you know, a trend to a trading range. So even this sell-off that we had around 2 o'clock, it's really more minor than anything else. Oh, whoops, here's another day. So let's go to the next day. So here's bar one, big trading range, you know, still all, you know, maybe a second entry short, you sell it, but it's really within a large trade, within a trading range. Not a great short. If you sell, you probably get out of longs above this bar. Then you got to get short again. So easily just a mess. Easy to get just whiplashed and lose a lot of money on the open. Probably better wait for a breakout. Here's a breakout, bad follow through. Odds are you'll get a second leg. And so one thing, I mean, even when you get this breakout, sometimes you always have to wonder if it's going to be a measuring gap or not. And when you get a breakout at or above some highs, then you get a bad follow through bar, but it doesn't close the gap, and we start drifting up. You got to be a little nervous that we may just continue to go higher. And this is why traders will buy the close, even if they say, hey, even if I buy here and price goes down, then goes up and goes down again, and it's a second entry short, and I got to get out for a small loss, I might instead get this. And this, the reason why that happens is it subtly traps traders in the wrong direction. You know, you sell, you get this breakout bar, you over here, you put a limit order to sell these highs. And then you get this and you say, darn, I'm trapped. Okay, I couldn't get out there. I'll just sell a little bit higher. Okay, maybe I'll get out over here. Maybe here. And then you're saying, darn, you know, now you have a huge loss. Now you have an even bigger loss. So that is kind of the logic behind kind of that setup. So either way, it's always in long no reason to get out. Odds are you'll get the second leg. Strong breakout. You can argue wedge 1, 2, and 3. 1 pullback 2, pullback 3, or 1 pullback 2, pullback 3. Either way, it's climactic. Hadn't touched the moving average since down here. Probably will. I would get out of shorts below the bar, even though we may go a little bit higher. But if you get out of shorts, you probably have to buy it. You know, if you're aggressive, you get out, you buy again, you get out. But, you know, not really it's not easy to buy in here. Which makes me think we're going to go test back down to here eventually. And there you go. So why did this happen? Well, what did I mention over here about this and this? Strong enough that traders will sell and scale in. Well, what about over here? Same thing. The only difficulty here is it's a less reasonable sell. So some traders will sell, and then instead of putting a stop right above it, they may sell more right above it and put a stop double that. So maybe they sell here and say, okay, you know, some traders would buy back shorts here, so maybe we'll go a little bit above it. So instead of I'll sell here, I'll sell more here and put a stop up here. Betting would test back down, which we did, and we bounced again once we got to these lows. Very advanced thing to do. I wouldn't recommend it. And now we're channeling off. So bear breakout, couple bear bars. It's always in short, probably going lower, at least for a second leg. We just keep drifting down. Bulls, the bears eventually give up. Bulls start buying, but again, if you buy, probably need a wide stop. Then we went sideways into the day. That's really all the time I have. I will be making more always in videos. Please ask questions about always in. Maybe there's a question you have that I'm just not thinking of, answering, or just I hadn't answered. I'd love to know y'all's opinion on maybe difficulties you're having with always in. The number one the first thing is you'll get burned just switching back and forth all the time. And what I mean by that is you sell here, you buy here, then you go short here, then you buy here, and you go short here, you buy here, you sell, you buy. Very easy to get caught up, so would not recommend it. Anyways, hope this helps. Please comment, ask questions. Happy to help.